I think that the market was expecting the easing in these production cuts to come. It is on the schedule that OPEC had put out. They extended the maximum cut for an extra month into July. And I think given the recovery that we have seen in demand, you referenced the big inventory draw, that things are looking a little bit better now.
Where do you think we're going from here? I see so many of your peers in the industry. I was reading Martin Gratz from Morgan Stanley as well, just saying, well, we're kind of where we're at now, and there will be volatility, but we seem in a bit of an equilibrium. Would you agree with that?
I would agree with that. I think that it's going to be tough for oil prices to move above $50 in the near term. There's just too much spare capacity and too high of inventories. But at the same time, OPEC has been very disciplined in the way they've been managing the market. And I think if we did see a downturn in demand, that they would match that with another pullback in supply. So I think something in the mid-40s is probably about right for price.
Jason, the Saudi energy minister mentioned in comments about those nations that had not been fully compliant, not cutting back on production, so will be forced to play catch-up. That sounds like somewhat of a disaster when you see prices potentially recovering and then they're having to take those cuts a little bit later than they should have. What do you make of that and how damaging it is for some nations?
Well, I think the key point here is that the Saudis want to equally share the burden. And some countries like Iraq and Angola were not able to schedule their production cuts in time to be compliant with their targets. So they'll take that oil off the market later on. It'll be the same number of barrels. I do think that OPEC cohesion right now is very important to support price.